Hi folks, and welcome to another episode of Careers and Coffee. So today and this week, it is National Talk Money Week, and it's a really important week to get us all talking about money, regardless of who we are, what we do, just to make sure that we are a nation of savers, to make sure that we're being more responsible and that we've got fantastic financial well-being. And today, I'll be welcoming on Alan Nichols from the Money and Pension Service, who I think just popped up. So we're going to bring Alan in to talk to us a little bit more about his role and Talk Money Week. So let's bring on Alan.
Hello.
Good afternoon. How are we doing?
Very good, thank you. Very good. And it's sunny outside, so I'm thrilled. How are you?
I'm very well. Likewise, having some decent weather for once in a while is very nice. Maybe it's because it's Talk Money Week, and today you're on Careers and Coffee. The sun's off to come out. But right, we've got to play ball. So it's National Talk Money Week. Alan, talk to me a little bit more about what is the Money and Pension Service, what do you do, and why is this week really important?
Sure, absolutely. Well, so the Money and Pension Service is a government agency that looks at how money and pensions is talked about across the UK. And we've got some different priorities that we are being given to look at. So things such as debt and money guidance, but also what we are importantly looking at is how we can increase that conversation and normalizing the conversation around money. So the Money and Pension Service provides a number of different free tools around money and pensions. You can go onto the website, have a look at some of those important decisions that you need to make around money. Let's face it, money is every day. It's around us all the time. And we sometimes just don't know what we're supposed to be doing with some of those bigger decisions. And the website, and also we've got people on the phone, are there to provide some of that support with making big decisions, like buying a car, for example, or taking out a loan. What should I do? Should I be doing this? What else should I be factoring in as part of some of those decisions? And then also what we look at, and you refer to Talk Money Week, what we also do is then work with people, so employers, big agencies, some of the local governments, to look at what we can do to make that conversation around money more normal, because we don't talk about it.
I mean, that's an interesting point as well there. We don't talk about money. We don't talk about how much to earn, all of those sorts of things. Why do you think that is? And I think it's quite I think it's the British thing. I've not seen that in sort of other cultures usually. Why don't you think we talk more openly about money?
Well, I think there's a number of reasons why, and I don't think it's necessarily unique to the UK. I think it's about how we're brought up. I think there's Britishness as well about how we just generally talk. When we think about how we talk about our own well-being physically, I ask you how you're doing, you say, okay. And that's part of our just normal response. But what we do see with things such as like the mental health movement that the government's launched, and actually there's a number of things that we've been keeping secret about how we really do feel that we don't open up about. Now, that's just, I think, because we have not been in an environment that necessarily talks about those things. And that's what the trend we're trying to buck. We're trying to make it so that it is okay to talk about these things and to seek advice and to have a common conversation around that. It's a difficult one in terms of knowing why we don't. Parents may not do it. Our schools, we don't talk about it as part of mathematics and normal everyday living. So, and our employers, when we go into employment, our employers, when they give us a large salary, don't necessarily tell us, okay, here's your enormous amount of money, and so this is how you should spend it. And that's what we want to see if we can try and influence.
That's brilliant, thank you. And in terms of you as well, so we've sort of given a summary of what Money and Pension Service does and what this week is all about. Tell me a little bit more about you and your career and how you're doing, well, what you're doing.
So, I mean, I'm very old, so I've had lots of different jobs throughout my lifetime. And actually, I've not had a normal pathway into government, which I think, from a careers point of view, actually going into government is such an exciting opportunity, and it's not one that you necessarily think of, first of all, as part of your career pathway. So I used to work in a bank for 15 years. I worked for Lloyd's Banking Group, and I started there as a bank manager in my 30s. And I worked at the front line helping people in the bank with their money and looking at what they could do to save and spend. And I also worked a lot within the community around doing different things to help raise money for the local charities, and also around looking at protecting people with their money. And because of that, then I got moved up into the Chief Executive's office to work on a strategy around financial well-being for the 25 million customers that they served. And then because of that, that gave me then an opportunity to move into government to look at what they can do to do this on a national picture. But before that, I used to work for Selfridges in central London, worked there for 6 years. And I also worked for a company called Space NK, selling makeup and lipsticks for 6 years.
Right, I hope you had a decent discount at Selfridges. I mean, that would be something difficult to give up, you know?
Well, so again, linking that to money, yes, we did, but it was on your credit card with work. So what you had to do was take out a credit card, and you spent on your credit cards to get the discount. But of course, it encouraged you to run out more money.
Oh, shopping. It's the devil. It really is.
I'm not saying it's bad, but obviously what would have helped at that point was to tell me, if you do this, this is how you spend and save correctly to ensure that you don't get yourself into some trouble. But yes, some big discounts.
And now, yeah, in your current role, what does, if there is one, an average day tend to look like?
There isn't an average day. So my role is within the east of England. So I cover 6 of the counties, from Cambridgeshire, Bedfordshire, Hertfordshire, and then Suffolk, Norfolk, and Essex. And so my job is to go out and speak to people within those regions to talk about what they can do to help improve financial well-being in their different sectors. So I speak to big employers about what they can do with their colleagues that they employ. I speak to local councils and governments to see what they can do to help people that are vulnerable and improve their financial well-being. So my week can be, I can be presenting like I am now, talking about money. I can then go to what's called roundtables, where they get lots of people together to talk about what they can do to make a difference and add in some of the facts and figures around what we see as a national picture. And then there's the boring stuff, which is writing lots of reports and speaking to my boss to tell him how good I've been all week.
We all have to do it.
Yeah.
And now let's sort of rewind the clocks a little bit back to when Alan was at school. You know, what were you like at school? Did you always sort of dream of being in the money and pension service? And also, were you fairly responsible with money back when you were a little bit younger?
Wow. Okay. Well, look, when I went to school, it was a very different place back in my day. So I went to school in the 80s, and it wasn't quite the same, environment, inclusive environment that we see now in schools, which is really good, because going back to my point about conversations, now we can have lots of conversations about different things that are free. So school was a bit difficult for me, but that I still cracked on. And I was the first in my family actually to go to university. My family's a working class background. My dad was a window cleaner. My mother was a dinner lady. Both of them are disabled. So I suppose I didn't really dream of anything big. I never dreamt of working in the government. I never dreamt of working in Selfridges as such. And actually, I wished I had more career projection. I wish I'd had a conversation with people about what could I be, what's my talent, where can I go. What I wanted to be, I think, was I wanted to build houses, build lovely big mansions, and like you see on Downton Abbey, and decorate them all with lots of nice stuff. So I'm not quite lined up, have I?
It's an aspiration to work towards. It's not over yet.
I think, actually, in terms of career, what it's taught me is, because I've had that different career segments, is it's taught me that actually you don't have to have one job for life. You must do what you feel you want to do, but also importantly, you must have a skill around that. You must be talented. You've got to be able to do what you want to do and then do it well.
Brilliant. That's great advice. Thank you. Now, let's talk a little bit more about finance and money, and really start to get into Talk Money Week. Now, my first question is for you. Throw us on everyone's lips. Are you good with money?
Oh, Jordan, I was dreading this question because, there's what's called the politician's answer within government, and then there's the real answer. So I should be deflecting by going, I think the real question you're asking is, but actually, look, let's be honest, I'm not good with money as a behavior. But let's just unpack that a little bit, because behaviorally, if I have money in my pocket, I will spend it because I see the nice things out there and I want to go and buy them and add to my life. But I think what I've learned over the years as well is that actually being a spender means that I have to train my behavior to go and save some money for the future. So it's a bit like with physical health, isn't it? If I eat a lot, I put on weight. I'm one of those people. So I know that in my behavior, I have to go to the gym and I have to work off some of those calories. So I think actually being a spender is not a bad thing. You can be a spender. It's once you know who you are, then take some action around that. There are other people though that are very good at squirreling away money, and even if they've got low income or not a lot coming in, they're still very good at squirreling away some of those things. My brother, for example, whenever we had a Mars bar, I'd stuff the lot. He'd cut his up into segments and then eat a bit throughout the day. That's a behavioural thing. The difference is just learning who you are and then what to do about saving that money.
Good answer. Very good answer. Now, talk to me a little bit more about savings. Why is it important that we're all saving for a rainy day?
Well, look, we all know about coronavirus now. It's been in the news a huge amount. And what we hear on the news is lots of things about furlough and redundancies. And what that means is that people are suffering from a shock around what's called their household income. So their money that they get from their job coming in may have been reduced down, or they may have lost their job, so that money coming in has gone away. So why is that relevant? Well, savings is the thing that helps those people in those situations. And that's what people should be drawing on, rainy day savings or emergency savings, so that when the money that I'm used to seeing coming in and out goes away, I've got another pot that I can take from. And what we know across the UK at the moment is that 11.5 million people have less than £100 for that time. So when coronavirus kicked in, it meant that when they went to go and try and cover the money that they don't have, they had less than £100. And we know within the East of England that 10% of all people within the East of England, that's around 6 million people live there, so 600,000 people had no money at all to go to. And what that means is that when that money stopped coming in, they then had to go and take out credit or debt to cover that lack of money. But we also know that with savings comes what's called financial resilience or financial well-being, or in layman's terms, it just means I feel good because I know I've got some money in the pot that's there. And that in itself makes people feel good. At the moment, 73% of people do not feel good because they don't have that money in the pot. Now, Jordan, I want to just emphasize, I recognize that some people can't save because the money they've got coming in only covers what they are spending. But what we are looking for people to do is to do budget reviews, look at what comes in and what they spend their money on, and see if they can make small little savings to put that money away for a rainy day.
And let's unpack that figure around sort of 11.5 million people across the UK have less than £100 in savings. Yeah. Why is that? There's the obvious one that folks obviously aren't earning enough, or perhaps they're not, saving it correctly. But is there, can you elaborate on that a little bit more? Why is that?
Well, look, there's been a number of reasons why we don't have that behaviour, and it goes back to the previous conversation about we don't talk about savings and something called long-term savings, so pensions or saving for the future for when you get older, like me, and you have to start living into your retirement life because you don't have a salary coming in anymore. But we don't talk about those things. There's also, we've gone through generationally access to credit. So the banks, and because of the way Britain and the economy was working, we could get cheap money to borrow. So we could borrow £100 and it would only cost us 1%. And so that developed a behaviour amongst people to do that. And so having credit became normal. It was okay to have a credit card, have a loan, have an overdraft. But of course, what that did was it drove the behaviour for people to not then save their money in a pot. They just thought that if the bad day came along, they could take out a credit card and they would use that instead. But what we see now is across the UK is that we've got some 10 million people that have got credit cards that they can't pay back because they thought that would be their solution, and they're trying to pay that money back, and they're stuck in a situation where they can't pay because they're not earning enough money in. So, go on.
No, I was just going to say as well. You talk a lot about debt there as well. You know, because debt isn't always a bad thing.
No.
Can you tell me, or maybe give me a couple of examples around, the difference between good debt and perhaps some bad debt as well?
Well, so there's no such thing as good debt and bad debt, because taking out money or borrowing money from somebody is circumstantial to you and your situation. So actually, we've heard in the past about payday lending and thought, oh, that's not such a good thing. But actually, for an emergency short-term period, it may well be that it is actually just for a couple of days, take that money out to tie you over and pay it back, because the interest rate over those 2 days won't be that much. Similarly, with overdrafts, your overdraft on your bank account is designed for you that when that money that you thought was coming in was going to pay for everything, and you've had a couple of pounds that it hasn't covered. That's the idea. So there are many different forms of credit. You can take out loans, credit cards, overdrafts, payday loans. There's also salary deductions now that you can take out and use money to borrow from your employer. None of them are bad. I think what we want people to do is to know what they're getting themselves into before they make that decision. And that's where the Money and Pension Service website comes in handy, because when you go to that, a bit like with a medical condition, you go in there, you look at the situation, you tell it about you, and then it says at the end, sounds like what you should do is perhaps get A, B, or C.
Good, very good advice. Very good advice. Thank you. And now, if I'm a young person watching this, either now or in the future, perhaps I'm now starting to think about, okay, well, I've got my first part-time job. I've got some money coming in, but actually, how do I set up a bank account, for example? Is that something easy to do? Where can I find some resources to be able to help me do that? How would I set up my first bank account?
So bank account is really, really important, especially for modern living, because everything's on the internet nowadays, isn't it? And so we transact, and actually many people watching now will probably be thinking bank account because it's what I use on eBay or Amazon or within selling online or anything. So bank account's really important. Now, to open up a bank account, you have to go to one of the financial institutes, so the big 5 banks that you'll know on the high street. But there are other places that you can also get bank accounts, such as your local credit union, and also some of the newer banks that you'll have seen that are coming out, the ones that are based online that do everything for you and they send you a card. I think what's important, though, around opening a bank account is anyone can have a bank account in the UK. No one is stopped from that. But there is something called money laundering regulation, where you have to prove your identity, and that's, again, quite normal. And you have to prove your name and you have to prove your address. And that can be a challenge for some people, because normally what you do is you use your passport and your driving license. But if you're between 11 and 16, you may not have something, you certainly won't have a driving license. So what you need to do is you need to speak to your parent, your guardian, or the person that cares for you, and ask them to help you open up that bank account in their address name. So you go along to your local bank, ask them to open up your bank account, and then take that person with you. After that, should be very easy.
Fantastic, thank you. You also touched on some banks that folks may not have heard of. So some of your challenger banks to your big 5, Lloyds, Barclays, etc. and some of those will be Monzo and Sterling, can't remember. Are they still safe because you can't go in and see someone? Yeah, what's your take on that?
It is an interesting question, isn't it? And again, I've worked with, when I worked at Lloyd's, we worked on what was called digital migration. So taking customers that were used to coming into the bank every week and taking out their money and doing that online instead. So let's just reassure you. So all banks within the UK, so that's any bank that's UK PLC, is regulated by the government's regulator. So it's a place called the FCA, or the Financial Conduct Authority. So if you want to open up a bank like Starling and Monzo, you have to go and speak to the FCA first and register with them. And what that means is if anything happens to that bank, when you put your money in there, it's insured by the government, so you won't lose your money. Now, it is capped at 80,000, so if you put more than £80,000 into that bank account, you need to think about what you're doing with that. But my next question is, if you've got more than £80,000 in your bank account, you should be thinking about savings anyway, and what should you be doing? And then you should be looking at our website to see what you should do and what the comparison websites show you where you can squirrel some of that money away.
Awesome, thank you. And I think this will probably be a question for maybe students or young people who are sort of college, uni, thereafter, first jobs, apprenticeships, etc., who may still be living at home or maybe renting or doing whatever. But at what point do you think folks should start saving for a house? Assuming obviously that's what they want.
That's a really big question, isn't it? Because there's so many elements to buying a house. The first one is affordability. You've got to check if whether or not you can actually afford to buy the house in the first instance. You've got to then choose where you want to live, and then you've got to be able to determine if you've got enough income and if that income is going to last for 25 years. So there is no right time to buy a house. You can buy a house right up into you're 50 years old if you've got enough money. I think for me, the important point is that you should be putting some money in a pot, because the thing that the banks will look for, first of all, is whether or not you've got savings. So even at a young age, if you are putting £1, 50p, £10, however much it is, into a savings pot every week or every month, the bank will then look at that and go, Jordan's been saving every week for the last 5 years. He's put that much money in the pot. That means he's a saver and he knows how to look after his money. And that's one of the key important things. And then also you need to have something called a deposit. And that's a certain percentage of the value of the house that will go towards making the mortgage. So if you bought a house for £300,000, you normally have to have around 10%, £30,000 in the pot before you can go to the bank. But to answer your question, you can buy a house, like I say, any time along your life journey.
That's brilliant, thank you. And now, if you're whoever, and you are trying, and maybe you are spending a bit too much and you're not great at saving, what's your advice to somebody to make them a little bit more independent, to make sure they are saving money? Is there any sort of tips and tricks that you would advise someone to help save?
Well, we've got loads of examples of what people can do to, save or cut down on spending, because we don't want to be prescriptive. Some people like to spend £20 on magazines every month, as or online magazines nowadays. Some people like to do that because that's part of the joy of life, isn't it? That's their thing. Or they want to spend £80 on their hobby once a month. I think the important thing to do for anybody is what's called a budget calculation. So that's where you know that on a monthly basis you get £100 in, and then you work out what you're going to spend the money on. And we break that down into 3 categories. One is what's called fixed spending. So you know every month you've got to pay mum and dad £20 to live at home or for housekeeping, and you know and then every month you have to spend £10 on your mobile phone. These numbers I'm making up because I know there are a lot more than that. But so that's what would be fixed. You have to pay that every month out of your £100. That gives you £70 left. Then from that, you work out, should I put £10 of that away? That gives me £60. Then that's when the fun stuff kicks in. How much is it going to cost me to eat for the month? And then how much is it that's going to cost me to do the fun stuff that I like to do? So, it's all to do with what you want to do. If you are in a situation where you think, I don't know how to save money on my mobile phone because I'm currently spending X amount, that's where the comparison websites are really helpful, because that's where you go on and have a look at where you can perhaps get a cheaper deal and for the same thing that you're getting. And then that money that you save, you should be squirreling away.
That is brilliant advice, and I think there are, and I know there are lots of websites out there to compare the market with the little meerkats and stuff, and Money Supermarket, all of those sorts of things, and you can compare so much on there. Life, health insurance, car insurance, all of those sorts of things.
Yeah.
So I definitely echo your points on that one. Something I did want to ask you as well. What's been one of the daftest things you've spent money on? That's the question. Nothing too fancy to it.
You're so mean to me, because I suppose for me, when I look back, I got very absorbed in fashion because I worked in Selfridges, as I told you, and that meant that I liked all of the different products out there that maybe were a lot more expensive versus what I could have got elsewhere. So I remember spending close to £100, but back then £300 was an enormous amount of money on a pair of trainers. And then my mate turned up in the club, and he was wearing what looked like exactly the same trainers that he had bought for £20. So I suppose there's a part of it which was I felt good for, I'd saved up my money and spent £300 on these pair of trainers. But then in hindsight, I realised they were white trainers with black stripes that the same as what he was wearing. I'm not saying it was wrong, because I know that there's some brand, satisfaction that we get if we save up that money and buy those Nike shoes and we feel good. That's fine. I think it's just, could I have used that money to have bought something else, or could I have got my mortgage quicker, or could I have, done something else?
That's a good. I like that. I thought I've spent some money on some daft things. I probably have. Yeah. I do.
Yeah. Now I spend too much money on wine. That's what I spend too much money on.
that's not good. Glass of red a day keeps the doctor away. Excellent. So, yeah, in terms of, I suppose, if we were to, because I always say, about rewinding the clock. If you were to rewind the clock back to sort of 15-year-old Alan, what advice would you give him financially to make sure that he's on track to be a saver, to maybe get his own place, to to add pension, all of those sorts, which I don't think we often think about when we're that age. It's not until you're drawing down your pension that you're like, probably should have done that. So what's your advice to 15-year-old Alan?
This is a really good question, and talking about money and talking about the things that you just said there, like pension and credit cards and bank accounts. Let's face it, it's quite boring, because there's nothing exciting about getting a bank account. There's nothing exciting about having a pension, because you've got to wait forever before you actually see it. I suppose the advice I'd give my 15-year-old self is probably first of all, would be go and get more educated on finances, because it will make you feel better about yourself, both mentally and also just in control of your life. But the other thing as well, my granddad said a great expression to me when I left home that I didn't understand at the time, but I do now, which is, don't mistake joy and happiness. Sorry, don't mistake happiness for joy. And what he meant was that actually, when we go out and live in this world, there's lots of things on Instagram and Pinterest, and I'm sorry if those are not fashionable anymore, but we see things in magazines, and we see the Maserati, and we see the nice shoes, and we think that if we buy those things, we're going to make ourselves happy. Now, we can make ourselves happy because there is a feel-good factor with those. But joy is about everyday stuff that you just, baking a cake and being successful of doing that, and going for a long walk and seeing the trees, or meeting up with your mates and with a cheap bottle of wine, can be just as joyful in life. So just be conscious whenever you're looking at money things, that what you're spending your money on, is it trying to make yourself happy, or is it joy driven? Because if it's joy driven, you'll invariably then want to save that money to do it again.
God, that's brilliant advice. That's really, really nice advice. I like that. I think it's how can that add sort of value? If you make sure you're sort of content to begin with, that flash car, those shoes, that whatever, should just add value to your overall well-being, rather than it be the sole purpose driver of it. I really like that. And I'm gonna close it there on time for once.
Wow.
But I know. But Alan, it's been an absolute pleasure having you on today. I think it's so important that we do talk about money, talk about it more honestly, that we have more than that. How's finances? Okay. If there is a problem, there's places such as Money and Pension Service to go to, of course, your family and your friends and colleagues. So huge thank you for coming on to Careers and Coffee today.
No, and thank you very much for letting me come and talk about this subject. If anybody's interested, you should be able to see the Money and Pension Service. That's the website. So if you're interested, anything to do with money, have a look at that.
Good stuff. Thank you so much for coming on, Alan.
Thank you again, Jordan.
So folks, that was Alan Nichols from Money and Pension Service, talking to us today a little bit more about finances, how to budget, how to save, how to make those all-important life decisions. So huge thank you for him for coming on today. As always, we have a survey in the description bar below. Please go on there. It helps us shape future content for Careers and Coffee. So be sure to go onto the description below to fill that in. Now, that's the end of this week's Careers and Coffee. It's been a brilliant week, some really interesting guest speakers, and next week will be no different. So tune in next week, Tuesdays and Thursdays, 12:30 till 1 for Careers and Coffee. Look forward to